What's going on, guys? Is your boy E is Profitable. Today I took two beautiful trades on the S&P 500. One was a counter trend. The other one was a trade I took after lunch. They were both beautiful trades. And towards the end of the video, I'm going to go over an algorithmic glitch that I have noticed, that when it occurs, it gives you a strong indication as to where the market is going next. Let's get it. These videos are meant for educational purposes only. Any trades taken in the financial markets are under your own discretion. The information taught should be demoed and only taken to live accounts under your own responsibility. E is Profitable will not be held liable for anything you do with the information presented. All right, guys, we're back in the charts. All right, so this is the weekly. As you can tell, price tapped into the monthly imbalance. This is pretty much where we left off the last time I did the review. The only thing I added differently was this weekly imbalance sitting up here. I like how it looks. I think price is going to mitigate that area before continuing the bearish momentum. As far as the daily, we know that the market again took out sell side liquidity. Today was a very strong reaction. So let's dive deeper. Let's take a look at that. So the first thing I had marked before the day had started, I had noticed that there were two 15-minute imbalances that looked pretty good to me. It was this one right here. This was one of them. I'll mark it here. And that one there. Then I saw that we had one sitting higher because there were two, and I was bullish for the day. My bias was bullish for the day. You know, I definitely wanted to be careful. What I really wanted to see was for price to mitigate lower, take out more sell side before moving higher, and that didn't really take place, but that's fine. My first trade, as I had mentioned in the introduction, was a counter trend trade, and I took it off of this 15-minute imbalance. So I want to go ahead and zoom in that area so you guys can see why I took that trade. All right, so when price tapped into this area here, this 15-minute imbalance, the first thing I immediately did was I started to look for any 1-minute fair value gaps. So I saw that one that I had marked, and then there was this little one here that was created. All right, so as soon as I saw that these two 1-minute fair value gaps were created, I knew that if price came back to that area, it could have been a perfect entry for me to go short, which exactly what I did. So a few key things you want to take a look at here is price tapped into the 15-minute imbalance. Price broke short-term market structure. There was a market structure shift that occurred right here in this bearish momentum. It left behind two 1-minute fair value gaps. So I got into shorts. You always want to get into the first one, and you want to put your stop loss at the high, the swing above. Why do you want to get into the first one? There is no guarantee that price will tap into the second one. And why do you want to put your stop loss at the swing high? You can either put it up here. I like to put it here, is because price could potentially tap into that second one, and you don't want to get stopped out. My TP was right here at this sell side liquidity, and I was perfectly fine with that. That was a 1, 2, 4, just about pretty good money, and I was very content with that. I did not take this trade here. I was not expecting price to take off that way. I did miss this entry, and that's completely fine. I was happy with the money that I made. So then I started to look at price action, and I wanted to see what was price doing next and where I could potentially get into another entry. All right, so we know that Friday highs had not been taken yet, right? And right during lunch, we see this retracement that started to occur, right? And when you see, you know, this type of price action happen, typically what price tends to do is it'll retrace during lunch, and then it'll be a continuation. So it's a very good location to look for an entry for a continuation for the day if you are bullish for the day. I was bullish for the day. despite me taking a counter trend. So I missed that first opportunity. I was looking for a second opportunity for me to get in with the flow of the market. So when price stopped here and I knew that there was buy side liquidity sitting above, I immediately started to see where I could potentially enter. So the first thing I noticed is that there was a 5-minute fair value gap that was created. Price was dancing around that area, so immediately when price touched that area, I zoomed into the lower time frame. And this is where that algorithmic that I have noticed, where sometimes the algorithm will create these glitches that kind of reveal what's happening next. And I'll go ahead and show you that right here. You see what happened with these two candles? Take a look at those two candles right there. What is happening with those two candles? Look at the high of that candle. The high of that candle is 3667.8. The high of this candle is 3767.8. They are literally the same. That is a glitch in the algorithm. You know, price should not be that perfect. When you see things like that, you have to pay attention to that, because you know that price is going to come back to mitigate that, to take that out. So as soon as I saw price dancing in this 5-minute fair value gap, I went into the 1-minute time frame. I waited for price to reveal itself, and right here, right in this moment when price created a 1-minute fair value gap, that was my entry. All right, with my TP being the high of Friday. So this was my second trade for the day. I went long right here. Very beautiful trade. It played out perfectly. All right, that was my stop loss, and that was my TP. That was a 1 to 5 practically. So those were my two trades that I took today. Today again is October 3rd. I did the counter trend in the morning. I missed the big move of the day. That's fine. I waited for price to reveal itself, and then I got right back in into buys of the day. So again, pay attention to what price does, and when you see the algorithm leave little footprints like this where price action is just too perfect, you know, you have to pay attention to that. You know that most likely price is gonna go back to mitigate that area. All right, so going into tomorrow, you gotta let price do what it does. You watch price, and then you take a trade based off of what you see. Never assume that price is gonna go one way or another. Just let price reveal itself. That is very important. All right, guys, so that's what I got. Thank you for joining, and tomorrow we will see what price action does and how we take advantage of those moves to generate some income. All right, guys, you guys have a good night.